So this is what we're going to do tonight, right? We're going to start off with trend lines. So I want you guys to get your notepads, your notebooks. If you're using your phone to take notes, you can. I don't usually advise because it sticks when you write the notes in a notepad, all right, to me, rather than typing it out, right? Get your laptops as well. So even if you have to minimize my Zoom window to practice, I want you guys to practice with me. Why? Because I want questions coming. The chat box in the Zoom, it needs to be active tonight, right? I am looking for activity in the chat box tonight. So the person that I see giving me the most activity will win the self-a one-on-one session with me. That's the first one, because there are two, right? So the first one is the person that gives me the most activity in this chat box. And I ain't talking about just messaging in chat box, facts, coach, preach, coach. I ain't done that. That's not activity for me, right? Right? I ain't talking about that. Nuggets and all these things, sheesh, and all that y'all say. No, that's not activity, right? I want to see you guys asking questions, following me, repeating things that I have said. I want to see activity in the chat box. That's the first thing. So the person that I see doing the most tonight is going to win a one-on-one. All right? Now, the second thing, right, is that I am going to allow 5 people, right, and they have 2 minutes each to share their screen tonight on my Zoom call, showing me exactly what it is I taught. And the one that perfects it the best, the one that I can see actually putting in the effort and so on, will win a one-on-one session with me tonight. So you see how tonight is going to be? It's going to be interactive. This is going to be different, right? This is going to be different. This is going to be an interactive session. I want you guys to be alert. So if you need to get sweets, chocolates, whatever you need in order to bring up your activity level, in order to bring up that energy, get it, buddy. Get it, right? Good. So who ready for tonight? I want you to type game in the chat box. If you're ready for tonight, type game in the chat box. So let's go. Who is ready for tonight? Type game in the chat box. Let's go. Interactive session. I want you guys winning. We got $1 million. We got $1 million to catch in the market this year. I'm telling you, I ain't leaving no money on the table. I don't know about y'all, but I am leaving no money on the table. And you guys should be gaming with me, and we should be holding hands together and picking up this door together. Guys, let's go. If you're ready for tonight, type game in the chat box. Let's go. All right. So I'm gonna go over here now. Are we gonna start creating view? All right. So the first thing we're doing is trend lines. Right. Need you to make notes tonight. So why do we draw a trend line? Right. Look at that. Why do we draw a trend line? We draw a trend line to identify the overall trend of the market. We draw a trend line for 2 things: the overall trend of the market and the current trend of the market. Because in some cases, the overall trend may be an uptrend, but the current trend of the market could be a down, because it could be going to retest a previous high or low. It could be going to retest a previous support or resistance, right? So trend lines, right, is to identify 2 things: the overall trend of the market and the current trend of the market. How it benefits you to become a trend line trader is that if you're trading the current trend of the market, you can have a continuation with the trend, right? So if the trend is currently in a downtrend, right, you can look for entry as soon as you see it bouncing off. You see the candles or the trade bouncing off of that trend line to do a continuation. You can actually trade the market, right, and continue with the current trend of the market, right? Now, another way that you can also benefit from trend lines is the change of the trend, right? The change of the trend. So, for example, if you're looking for the market to change from a downtrend to an uptrend, a good way of actually getting into that trade, right, with good confirmations will be waiting for that trade to break your trend line. Because once it breaks the trend line, it shows you that it's, you know, we have momentum now to change and we're going to go into a different trend, right? So I just want to make sure if you're a beginner and you're on this call, right, your trend line identifies the overall trend of the market, right? It also identifies the current trend of the market. Hope you guys are taking notes. Yes, good. So what do I mean by that? All right, so if I have to zoom out on the 4-hour time frame, we can see here that Euro USD, without drawing a trend line, is on an overall downtrend, right? Everybody could see that we had an overall downtrend for a long time, right? Now, when I actually zoom in, the current trend is also a downtrend. The current trend is also a downtrend. So what you will need to identify your trend lines is your trends is over here on the left hand side. You should see the slanted line. That's your trend line tool that you'll be using, right? And I want you to, when you're drawing a trend with the trend line, you need to connect dots. There's a reason why I say that. People draw and identify trends with a trend line, and their starting point has no dot. And by dot, I mean you're not connecting it to a wick nor candle. It's just in midair, in the middle of the chart, and that's not the correct way to draw a trend line. When you're drawing a trend line, you must start from an area, right? You must start from an area where you can actually connect the dots, right? So something like this, right? Hold on a second. Let me move that to the 1-hour time frame. Should have always have a starting point. Always. If the trade moves away from your, so if you notice that the candles actually move away from your trend line, right, that's okay. That's okay. You may actually be able to draw an inner trend line from there, right, connecting to a dot again. You may be able to have an inner trend line from there, but don't force a trend line, please. By forcing it, I mean do not go through candlestick bodies, right? So you can touch the perimeter of the candlestick, which is, you know, as you can see, if I have to zoom in here, right? You guys can touch the perimeter of it. You can go through wicks, but I don't want you to go through the bodies of the candle, right? Now, the beauty about trendline trading is that all you need when the trade touches the trend line is for a candlestick pattern, which we will go through at a later date, a candlestick pattern, or the previous support, in this case, being broken. So I'll show you what I mean, right? So by now you guys should have understand support and resistance. So I don't need to go through the whole chart showing you support and resistance, right? So if I say, okay, Over here, you guys can see that we touched the trend line, we came away, and we came back here, right? And you ask yourself, coach, how would they have been able to get in this trade without knowing a candlestick pattern? Because the advanced traders will be able to look at this and say, oh, this is an engulfing candle. So as soon as it closed, I'm going to gain for myself, right? But for you, the beginner on this call, right? If you see that the trade has come to the trend line here, you're waiting for rejection. You're waiting to see how you can enter this trade. I want you to draw what I call miniature support and resistance. This is what I mean. In this case, because we want to get in for the sell, you're going to draw miniature support. Miniature support, I'm going to use the horizontal ray, means that you're going to identify the previous low. Yes? So, in this case, trade came up to the trend line. Your entry is when you have a solid body candle breaking your previous support. Right? If it's always a region, well, what I want you to do is look for the obvious. I'm using, as opposed to a line. To be honest with you, I'm going to be honest, don't think too deep into it. Right? You're going to have areas, you're going to have, yes, you will have areas, and yes, you can, sometimes you can draw a line, right? But I don't want you to use boxes when it comes to this. What you can do is look for where you have the most touches in terms of wicks. So for example, let's say for example, over here, right? So let's say we were identifying miniature support here, right? I'm using my longest wicks here, but I'm making sure that I at least getting 2 touches from those wicks. At least 2 touches. In this case, I was able to get 1, 2, 3, 4, 5, about 5 touches, right? So when I got the solid body candle break, I could have gotten in for that sell. Right? In this case here as well, you see that I have this wick here. Now you can see that this is lower, right? But I'm not going to draw my support here. I am going to draw my support where I can at least get 2 touches or more in my wicks. Right? So I'm waiting for a solid body candle to break this area here, right? And notice how once you get more than 1 touch of the wick, the area is actually respected. Right? So you see if I have brought that down here because the wick was longer, when this pulled back, it actually went through my support equals resistance before it came back down. Right? But if I actually put it towards more wicks, in this case, I look for at least 2, right? You can see how the area got respected before it continued for the drop. Right? But Kezia, that was just me answering your question. I don't want to confuse persons. Let's go back here. So you were looking to get into this trade, right? You drew a trend line, right? And you saw it came up here, so you brought your trend line down, and you're asking yourself, how do I know that the trade is not going to continue up, break the trend line, and go for a buy? As a beginner, I want you to utilize support and resistance, right? Identify your low. You can see that this is your support here. You got 1, 2 wicks, and then the market came back here again before it turned around. So you know that this is support, right? So I drew my support line, and I'm waiting for a solid body candle to break and close below my support line, and then I enter my trade. So imagine you entering this trade, right? when this candle closed, your entry would have been here by my green line. Your entry would have been there, and from there you can see 0 drawdown, right? Straight into profit. Before the trade actually paused again, you got 32 pips, right? And if you held, you would have gotten more. So just showing you guys as well, right? So if you understand so far, I want you to type $3 signs in the chat box. Lovely. Lovely. Good. And if you don't understand what it is I've just done, I want you to put 3 question marks in the chat box. So if you don't understand what I've just done, put 3 question marks in the chat box. So if you understood, $3 signs. If you don't understand, 3 question marks. All right, Casey and Monique, right? Let's go through it. So let's look at another example. I want to make sure you guys are catching on. You're understanding, right? So let's get another downtrend. So let me go further in the market. We're going to draw a trend line because we can see that we're in an overall downtrend, right? So we're going to get a trend line, right? And let me just use here, right? Let's use here. Let me make sure that that is a candle. Lovely. Good. So trade came up to your trend line, right? Your trade came up to your trend line and you're wondering whether or not this is a trade you should enter. You're wondering if this is going to break through and continue up for a buy, right? So you're trying to figure out which side should I get in on the market. Is it going to buy or is it going to sell? And if it's going to sell, where do I get in? Right? So once you get this touch, I want you guys to draw support and resistance. And all you're doing is boxing in price, right? So we talked about, so what I need you guys to do is to follow the trade so we can see the trade came up here. And this is the area where it started to go sideways, right? So I'm going to put my support line here. Why am I putting my support line there? Because this is when the trade starts to go sideways from this candle here, right? Now I have a long wick here, but remember I said I need at least 2 touches. So 2 wicks is what I'm interested in, at least 2 wicks. So I was able to bring it up because I can get this wick, and this wick. So I have 4 wicks touching this area, right? So this becomes my support zone. So for me, as a beginner, I'm not getting in this trade until I get a solid body candle breaking my support. So you guys can see here, that candle gives you your solid body close below support. So now your entry is here. This is your entry here, right? In this case, given that you had a little wick, you would have had 5 pips drawdown, but from there, the trade went 61 pips in profit. Right? So this is me bringing it together. And all you need to do is first, you need to understand support and resistance. So if you're on this call and you don't understand support and resistance, revert to my last 2 sessions that I did. And it's on YouTube. For anybody looking for my recordings, it's on YouTube. I post everything on YouTube. You guys literally have no excuse why you shouldn't be making money. I post all of my freeness on YouTube. Literally. Right? Coach Kier. So let's look at the chat box. Let's see what we have. See what the people are saying. Right. So the further up you draw the support line, the better, or it doesn't matter. The support line needs to have at least 2 touches of wicks. So that should answer your question. So you should never draw a support line where you only have 1 wick touching it. Right? So Naisha, that is yours. Billionaire Jordan, I don't like drawing trend lines using the line chart per se. Is different when you're using trend lines, because sometimes with the line chart, they're going to show you know, if you use the line chart to draw trend line, let's look, right? You end up going through candlestick bodies. All right, you end up going through candlestick bodies, or you're far away from the trade, or you recognize. So let's do it. Right? So let me go back. If you prefer to do it, you can, but for me, I like to see my candles when I draw my trend lines. You can, if you want to, right? But sometimes I've found in the past, using the line chart to draw my trend lines, I end up going through candlestick bodies. Because don't forget, the line chart does not account for wicks. It only accounts for the actual movement, so the bodies of the candle. Right? So if you had a fake out, you had a candle that came up here and fake out and came all the way back down, right? The line chart is not going to take that into account. So let's see here. What time frame is best to use? I use the 1 hour chart. Most of you guys should be using the 1 hour chart, right? Please make notes as I am talking, right? Most of you guys should be using the 1 hour chart. Why? Because I highly doubt that any of you on this call have an account that's $5,000 and over, right? If you don't have an account that's $5,000, $10,000, $20,000 and over, then you should be using the 1 hour chart. Why? If you're using a higher time frame, you're holding the trade longer. Why would you hold a 4 hour trade, a trade on the 4 hour chart or the daily chart with $100 account that after waiting 2 weeks for the movement, you only come away with $23, right? Why would you do that? Me, I prefer to catch intraday trading. Intraday trading means that more likely I in and out of the market between the London and New York session. So when 6 o'clock, I looking to be out the market. Right? When 6 o'clock, I looking to be out. Right? I getting in my trade, either in the London session or New York session, to grabbing my 30, 40, 60, 90, 100 pips. By 6 o'clock, I'm out. You guys need to compound your account. Fill it up, right? You want to drop down to the 15-minute time frame. For me, if you're on the 15-minute and the 5-minute time frame, you got a lot of time on your hands. You probably don't work, and you can sit down, you can watch the chart, right? But for those who are working, for me, it's easier for you to watch a 1 hour trade or a 4 hour trade if so much. If you're crazy busy at work and you're not allowed to check your phone, then you should be looking for trades on the 4 hour time frame. If you could check your phone at least once every hour, then you can trade on the 1 hour time frame. Because it means that you're looking for the trade to be ready every hour. And every hour is manageable, right? You could do your work and then come 9 o'clock, you check and see if it's ready. If it's not ready, you do your work again. When 10 o'clock, you can check and see if it's ready. And literally, it's just a little check. You don't need to stare at the phone. If you don't have that time, then you can do 4 hour time frame. Means that every 4 hours, you just check your chart to see if your trade is ready. And if not, then you wait another 4 hours. Kenny, we're not dealing with stop losses now. Right? That's going too deep in. Who else? So start with the line chart for support and resistance, and then change the candlestick. I prefer you to change to the candlestick pattern and the candlesticks when you're drawing trend lines. If you want to use the line chart for trend lines, that's your preference. But I tell you what it is I do. You don't have to follow me to a T, right? I'm just here to guide. You guys may be able to utilize the line chart better, then good for you, right? Good. So just caught up with everything there, right? So looking at this again, guys, right? So we came down, so we understand how we would have entered this trade, right? So we're looking for where the market would have paused, right? And we're catching at least 2 pips, not 2 pips, sorry, 2 wicks to identify true support and resistance. So we got the support there. So when it comes down, solid body candle break, you enter for your sell, you get your trade, right? No, that's like another scenario over here. Trade came up to the trend line. You don't know if it's going to break or if it's going to sell. You're hoping it's going to sell, right? In this case, you're going to identify your support equals resistance. You're looking for a minimum of 2 wicks, right? So notice I didn't draw my line up here because I have my 1, 2, and 3 down here. Yes, so this is where I drew my support line. My solid body candle breaks here. I get him for my trade. At the next candle, 3 pips draw down, and then everything else was gold, right? Simplicity. Whew. If you're catching what it is I'm saying, please type simplicity in the chat box. Simplicity. Awesome. 3 pips, Wendy. Pips means, so pips is the movement of price. You know, like how you have minutes and seconds or dollars and cents. Price moves based on pip count, right? And that goes back to basic forex trading. Yes. So you guys should be able to see. So far, we were able to see how we could have entered on this, how we could have entered, well, literally 3 times here, right? Now, as you can see, right? Let me move this straight. Let me move this one. So this downtrend, and then you can see that the market actually went into a stronger downtrend. Now, I don't know for those who were on the call last week when it was mentioning the difference between a healthy trend compared to a weak trend compared to a strong trend, right? So this here is between weak is not healthy. This is really a weak trend because the pullbacks are deep, right? You guys should see how the pullbacks are. But this here is what you call a strong trend because you can see you barely have any pullbacks at all, right? No, in a case like this, as I tell you guys, don't force a trend line. Okay, do not force a trend line. So if you're not getting it to do all the touches, that's fine. Don't force it, right? So you don't want to go through any candlestick bodies. So if you recognize that you're going through some, just adjust slightly. There you go, right? Now, over here, right? Same thing. You want to get in for your sell. You identify your minimum of 2 wicks for your support, wait for the solid body candle break, get in for your sell, right? No, you drew this trend line because you noticed now that you were able to get another trend. Came up here, you drawing support again, 2 wicks, solid body candle break, you're getting in for your sell, right? And if it doesn't come back up, that's fine. If you can then, and all it is, no trend line to me is right or wrong if it keeps. So what I mean by that is if I can take a trend line here now and I drew it here, so long as I can get a touch is respecting the trend line and is moving away, I'm fine with that. So when I say no trend line is right or wrong, please pay attention to what I'm saying. You see how we have this trend line here? If I came and I draw a trend line right next to it, right? That is okay, so long as the market is respecting that particular trend line, right? So if you got more than one trend line that is a little close, I just need to know that the market is respecting that trend line. If it's not respecting the trend line, then please move it, right? So you see how I was able to, you can see how the trade move away from this trend line, and I came now to draw another trend line to see if the market is respecting it or not, right? Now, by the market respecting, let's say for example here, right, you may not have been able to catch this one because you will not have identified that the trend was not going to come back to the original trend line, but you may have been able to catch this one here. So again, identifying support, right? You need two touches of your support. So again, looking at my longest wick, you can see it here. I need at least 2 touches of my support. So I got 2 wicks here touching. I actually got a third one. I even have a full one here. Waiting for my candle body to break. I have it here. I enter on the next trade, on the next candle, sorry. So I wait for that candle to close. 3 pips draw down. Currently, you'll be in 29 pips profit. Right? So let's see what we have in the comments. Thank you, Nikisha. Lovely. The part about the solid body candle breaking the horizontal rail. So almost got it. Kezia, all you're looking for is for the candle. So guys, I just want you to understand solid body candle break, right? Means I don't want you to get into the trade when it looks like as though it break. I need you to be confident that it has broken your support zone. So by being confident means that if the candle is breaking and this is 8:15, you're not getting into the trade until 9:01. That makes sense? So what that means is that you have to wait for this 8 o'clock candle to close at 9 o'clock so that you know for sure that it broke with a solid body before you get into the trade. Does that make sense? Good. Lovely. So what that means, you're not chasing any trades. Guys, please write on your notebook, not chasing trades. Literally, guys, you are not chasing any trades. What if it breaks after 9 o'clock? Jalisa says, what do you mean? Then you wait here for 10 o'clock before you enter the trade. So the whole idea is that the hour that it looks as if it's breaking, you wait for that hour to close before you enter the trade. So you are not chasing trades. So I don't care if that candle at 8 o'clock, right? That candle that opened at 8 o'clock at 8:20 was down here. You're not chasing the trade. So you should really be entering, if you're trading the 1 hour time frame, you should be entering your trades on the hour. You don't have to, I'm showing you guys, you don't have to drop down time frame. If you want to drop down time frame and it works for you, fine. But my job here is to bring simplicity to you. I told you guys from the beginning of this boot camp, trading can be simple. Right? Trading can be simple. Don't let anybody come and tell you that it's complex. Don't let anybody come and tell you that trading is hard, right? Remember that your brain, your actions, your body hears the words that you speak out of your mouth. Your ears are very attentive to those words. So if you say trading is hard, guess what? You will always see hard when you look at the chart. Literally, right? If you tell yourself, oh my God, I am not getting this, what do you think is going to happen? You think that the next 10 minutes you're going to get it? No, you will not. You will continue to be confused. You're going to get frustrated. You're either going to pelt the laptop away or you're going to move away and tell yourself, you know what, I can't with this anymore. Literally. So I need you guys to talk positive. When you're dealing with the chart, you're dealing with the market, you need to be positive. That's why your mindset needs to be in the right place. That's why trading depends on 90% psychology. So if your mindset is not right, guess what? You ain't trading right. Right? You need to be able to see clearly what it is the market is telling you. Trust me, if your mindset is not right, you won't even see a trend. You won't even be able to identify that you could draw another trend line here. I'm telling you, you'll be looking at this market and saying, oh my God, I cannot see anything with USD, but Court said that, no, this is not working, this trend line. Oh my God, I'm so done with this. Like, I need to drop all of those group chats. I am so done. I can't with this trading. Like, literally, and your brain is hearing all of that. Right? Your brain is hearing all of that. You will never be able to pick up the trends of the market. I can do this with any peer, literally. Let's go to an uptrend, right? So I saw this. We can see the overall trend in GBPUSD is a downtrend, right? We can see it happening here. No, we can see an uptrend happening as well. So current trend is an uptrend. I am taking my trend line and I am drawing my trend. Right? Trend line drawn. No, when it came here, so I don't know that any of this here happened. When it came here, all it did was I said, okay, well, I see 2 wicks come here. I see some rejection. Okay. Right? Good. How do I know to get into this market? When should I actually get into this market? This is where patience is going to come in. Right? No, it needs to break the previous resistance. This is not the resistance. This is when it gets a little tricky. I'm not saying that you couldn't have gotten in here. Yes, you could have gotten in here. But for me, this is the previous resistance. The previous resistance means I am looking for the mountain tops. Right in your notebooks, another word for resistance, another word for higher highs is mountain tops. So I am looking for my mountain tops as my resistance. So this will be me over here drawing my resistance. right? If you guys want to do it here, fine. I am not going to tell you cannot come here and draw your support and resistance as well. I'm not saying that you can't use this, but I'm just saying for the purpose of this training, I have to say, right, mountaintops for me are your resistance. Yes. So when we talk about an uptrend consists of higher highs and higher lows, right? A higher high is a mountaintop. This is a mountaintop here. Yes, this is your mountaintop. Why? Because when it came back up again to create another mountaintop, a higher high, is this one here. It's not here, it's not down here, it is here. This is your uptrend, right? Every time the market comes on, it tests your trend line is a lower low. Lower lows, another word for lower lows, sorry, a higher low. I'm getting confused. A higher low. Another word for higher lows are valleys. So it doesn't even have to be a higher low. It could be a lower low or a lower high, uptrends and downtrends, right? You need mountaintops and valleys. So in an uptrend, right, you have higher mountaintops and higher valleys. In a downtrend, you have lower mountaintops and lower valleys. Hopefully that cleared it up for you. So beginners on the call, if you want to identify an uptrend, you're looking for higher mountaintops and higher valleys. And if you're identifying a downtrend, lower mountaintops and lower valleys, right? So I hope you guys have the notes. So mountaintop here, valley down here, mountaintop here, valley down here. So you guys should be able to, it's easy for me to tell a beginner that is now looking at this chart for the first time, just look for mountaintops and valleys and I'm telling you they will get it. You go in front of a beginner that just joined trading and you tell them about support resistance, they don't know what the hell you're talking about. They're looking at you with a blank face, straight. Right? So if you are a leader in this organization and you have brought persons into this team, into this organization, into this business, if you have prospects on this call, if you have, you know, persons that may be interested in so on or whatever, when you're talking to your people, please use language that they can understand, right? Don't use support or resistance. You run them, literally. You start sitting on, you say, okay, so the trade gonna have something called support and resistance. Support is the floor, and resistance is the roof. You're confusing the person because they don't know what to look for with the floor and they don't know what to look for with the ceiling. So try to meet the person with simplicity. Your language should be simple, right? So your language, when you're talking about it, you can say, yes, you can reference support or resistance, but you can say another word for support is a valley, another word for resistance is a mountaintop. Literally, that's how you're talking to your people, right? And you should be walking them through how to identify mountaintops and valleys on the chart. Good. So you could have entered here, right? Or you could have entered here, right? I preferred you to enter here because this is the mountaintop. This isn't. But if you had entered here, it would not have been a bad idea because you can see, right? You got a solid body break of the candle right here, right? So let's do this together, guys and girls. Solid body break of the candle, you would have entered the trade, right? You would have, in this case, you would have entered the trade. As soon as that closed, you would have entered around here, right? Had you entered there, you would have had some drawdown. You would have had about 19 pips drawdown, 51 pips profit. I would take 19 pips risk, right? So 51 pips. If you had entered there. No, if you had entered now at the mountaintop where I'm telling you to enter, right? You enter here, right? You're waiting for a solid body break of the candle. You also would have had some drawdown, right? Because you would have probably entered around here. Yes, so you would have had about 30 pips drawdown and still holding because the trade has not break as yet, still going up with 27 pips profit. So the risk to reward trade still active, you know, it's still there. So you could have still gotten that. So it's 2 trades that you could have entered. And I'm showing you guys too how you can utilize support and resistance. Now imagine if you're trading trend line and you're also trading support and resistance, right? You could have entered the trade here, first position, right? We're gonna bring this all together. So I want you guys to see. Don't want to confuse anybody, right? So first position would have been, let's say here, you entered there, right? And if you had incorporate just trading support and resistance from last week when we talked about it, right? And you're just trading breakout candles of support and resistance, you would have also entered another trade here, right? And so far that would have been 2 trades. One of them would have been about, well, let's say up here, 69 pips profit, and the other would have been around 45 pips profit. 2 positions within 6 hours. So within 6 hours, you get 2 positions, right? So let's say within a day, let's say this is 24 hours here. Within a day, you were able to catch 100 pips, 2 positions, one from your trend line, one from the breakout of support equals resistance, which is what we did last week. Right? So let's see what we're seeing. Somebody said, I like this. Please note that that does not count as activity. We have to say that. We're only doing market execute, yes. When candle breaks like that, would it be more better of an option to wait for pullback? That is up to you. Right? This comes down to your strategy. We are not going through strategy right now, that's next week and week after. We're gonna go through strategy where we talk about the break and retest. That's when that comes in, right? But right now, we're just looking at simplicity, right? We're just looking at simplicity. We're not getting into how we're gonna trade in market, which strategy we are using. All we're doing right now is a peer study. Right now, you guys see now why you call it peer studies? Because we're just taking the chart and we're breaking it down to see the possibilities that we could have had with these trades, right? That's all we're looking for right now, the possibilities. We're not looking at strategy per se. We're not looking at, all right, yes, this is what I'm gonna run away with. This is stop loss. This is my entry. This is my take profit. Blah blah blah. We're not looking at that. Right now, we're just doing the core, right? And every single week, I want it to get better. I want you guys to get better. So you're entering the trade at the wick of the next candle. No. What we're talking about here is you entering based on the break of support, right? Based on the break of support or resistance. Solid body candle break. Right? Solid body candle break, you entering at the break of support. So solid body candle has to break support or resistance. Right? That's what we're looking at. Yes, we can get better entries when we go through strategy with you guys in the upcoming weeks. Right now, this is week 3. I just want you to see the possibilities. Right? 70 people on the call. Good. So we have that trend line there. We identified 2 areas that we could have gotten into the trade, right? Now I want to keep on uptrends because I did downtrends a little earlier. So I want to show you guys how you would identify it with an uptrend. So this one here, right? So again, trade on the overall downtrend. So remember, we talked about two types of trends that you would identify the trend line: overall trend and current trend, right? So just in case you guys didn't understand what I meant by that, the overall trend is a downtrend, right? Everybody should see that here. Current trend here, if we were trading this area, is an uptrend. Current trend, yes. So connecting from the dots, right? Connecting from the dots. So let's say that we didn't know all of this happened. So let me actually do it as if we were trading the live market. We see, so what do we see? Market moved away from here. So we saw this. There's nothing we can do with this data right now because we need the market to come back. So the market moved away from here and then it came back. So let's say this happened on Monday and you say, okay, I'm going to look back here on Tuesday and see what the market has done. So on Tuesday, you see that the market came back here. What you're going to do is that you're going to say, market's starting to get some rejection here. Maybe I could draw a trend line. Let me see if it respects it. So I'm going to put my trend line here. Right? Good. So your trend line is here. Yes. You want to know whether or not you should trade this as a buy, right? What are you looking for to break? The market needs to break what? Let me see what's happening in this chat. The numbers of the participants shouldn't be dropping because then next week somebody gonna ask me to repeat, right? No, not support, resistance, resistance, right? Remember, support is your value, Janice. Remember, support is below, right? If you're looking at an uptrend, current trend of the market is an uptrend, means you want to participate in the buy. So we're looking for the market to continue up. So in order for the market to continue up, it needs to break a mountain top. Yes, so mountain top here, everybody should be able to identify this is your mountain top. This is my highest wick here in this mountain top. This one here, I need at least two. So come here. This is where I get my two. Right here. 1, 2. All right, good. So we got our two. I'm waiting now. So we have the uptrend and the trend line drawn for the possible uptrend. We don't know that it's going to continue to reject this. All we know is that we had 2 wicks here. We drew this trend line and we're going to wait now to see if it's going to continue down or if it's going to bounce and respect our trend line that we drew, right? First. So you guys need to basically watch the market. You can look at this every hour. That's the beauty about this. Because then an hour later, you look back, you recognize the market started to move away. So there and then you should say, aha, I've identified an uptrend. Why? Because the market moved away from my trend line that I just drew. Right? Market moving away. So the next thing you need to pay attention to that you'll be checking every hour is for your mountain top to break. Solid body candle break. For me, this is it. But if you didn't see this candle, if your resistance line was above this candle and that wasn't it for you, then it is definitely this one here. You're in the trade from here now. You're in for a buy, right? The market went up 70, 80 pips. Market went to 80 pips, right back to your trend line, right? And all you did, you identified your current trend, which is your uptrend. You've identified your mountain top. You wait for your solid body candle to break. Could have been this or could have been this one. As soon as it closed, if this was 8 o'clock, you're not entering the trade until 9:01. If this was 9 o'clock, you're not entering the trade until 10:01, right? So if this is 10:01, you click market execute buy on your phone. You're in this trade. How many pips drawdown did you get in total? You had about 14, 13 pips drawdown for 77 pips of profit. I'll take that. What my people saying? What my people saying? Naisha, in terms of holding, we're gonna get to that, girl. Let me tell you, it gets better. It gets better, but the answer to your question is yes, you holding the trade. And I can tell you guys no, I actually skipping a few weeks by telling you this. You're not setting the take profit, you're always moving your stop loss. So the market only knocks you out when your stop loss is hit. In this case, it would turn into stop profit. So every time the trade goes up 10, well, in this case, I prefer you guys to move the stop loss every 15 to 20 pips up. So every time the trade goes up 15 to 20 pips up, you move your stop loss into stop profit. And it moves it again 15 to 20 pips up, you move your stop loss into stop profit. And you keep moving it and moving it till the trade comes and turns around and hit your stop profit, and you secure your bag out of it. All right? Sure. If you're looking for 20 pips, was a good stop loss ratio, I'm going to be honest with you, I do not set stop losses based on win rate ratios. So if I am not the person for you when it comes to balancing that ratio. Why? I like to work with what the market is telling me. So if I enter in this buy here, I'm just showing you guys this now. I don't want to get into stop losses. But if I'm entering my buy here, my stop loss is going to be at my previous valley. In this case is an uptrend. So my previous valley, right? So my stop loss is always at the previous low. I enter my trade here. My stop loss is at previous low. I am not doing, okay, I just want to secure 20 pips. So my stop loss is going to be at 15 or 18 pips so that I can have a good win rate ratio. I don't do that, because setting my stop loss 20 pips, 15 pips, 30 pips doesn't tell me nothing about the market. It doesn't tell me nothing about the market. It doesn't tell me anything about market structure. It doesn't allow me to see if the trend is currently a strong trend, so I know that it has a little pullbacks. It doesn't tell me anything. So I prefer to use what the market is giving me to set my stop loss. We will get to that. I don't want you guys to rush. You know that you guys eager to just use the strategy and take off and make money for the rest of the week, right? You know, you guys eager to do it. I would be too, but patience, guys. This is week 3. I said it was 8 weeks, and look, we're at week 3 already. 5 more weeks to go. Still at the beginning of the year, and a lot of you guys, you got some big numbers going through your head about how much money you want to make in this market after this boot camp is finished. Yes? Good. So that was GU. So you can see how we would have done it in an uptrend. You've seen how we would have done it in a downtrend, right? So it is 21 minutes past the hour of 9 o'clock. If you are watching this and you have gained value so far from my training call, type alive in the chat box. Type alive. If you are surviving my boot camp, type alive in the chat box. Lovely, lovely. Excellent. If you're not understanding what it is I'm teaching, please type 3 question marks in the chat box so that I will know what I need to go over. 3 question marks. If you're surviving, type alive. If you're not surviving these burpees, 3 question marks. The red line also acts as a support on the right. Got that braid there too. Yes, Kyle. Lovely. Good. At least 68 people on the call should be understanding. Right? So let's go. I'm going to do one more example, and then we're going to take it to the lines. Now, when you come on my call, and I allow you to share your screen, right? You're not going to talk. I'm not turning on the mic. The reason why is because I don't want that you have a noisy background, maybe your son or daughter crying, or somebody in the background hollering for mommy. I don't want that on my call, right? So just to keep it nice and smooth, right? You're going to, the instructions are, right? We're not doing it right now, but the instructions are, as I say, 5 people are gonna come and share their screen to show me that you understand what it is I taught tonight, right? How you're gonna do it, you have to go into the Zoom app, right? So you're gonna go into the Zoom app, and there is a button on there next to your name which says raise hand, right? And that's what you would press. I don't want you to do it right now because I'm gonna do one more example of both an uptrend and a downtrend, right? And then we're gonna choose 5 people, right? And you guys will have, the winner would have, Shanice, it's like, you know, you're so predictable. I know you would have raised your hand. All right, so next trade, right? Good. So downtrend. Let's go to current market. Right, so overall market, overall trend of the market is what? What is the overall trend of AUD/USD? I should be getting 67 people commenting in here. Now they know that everybody actually following. Lovely. Good. Excellent. Awesome. So overall trend is down, right? So you could have taken a trend line if you wanted to start it from here and you brought it down to here, right? So we know overall trend is down. Yes? No. Current trend, because we're going to try this. This looks like we would have came here and we would have started draw a trend line. So current trend is what? Current trend, people? What is the current trend? Lovely. Lovely. Awesome. Good. Be paying attention. Lovely. So let's just say, right, because we need to do it as a real example. I am not taking into account that all of this happened, right? So you came on here and you saw this. So you started here, right? This was the 7th of February. And you looked here and you said, okay. You looked here and you said, okay, I cannot see an uptrend starting as such. Maybe here. So let me just start to just draw this. And I'm going to do that. Right? So you did that. Yes. And you're waiting, right? No, this is not a mountain top. So this will not be what you'll be using. Yes. So I just need to put that there. In this case, if you were using this data down here, and you want to get into this trade, right? For me, if you want to get in there, go for it. But this is not mountain top. This would have had to be my previous data right here. And you see that that is a little far from where it is right now, right? So I won't be using that. However, right? However, you could have put this here. Would have been a little far, and you would have doubted yourself and said, Coach, right? Because this looks so far from down here. Well, you want me to get all the way up here? That's fine. The market is going to give you more data to work with, right? So I'm going to take myself through the process of some of you guys when you're drawing up the charts, because this is what you would ask yourself. Coach, right? This real far. So market came back down and it started to reject here. So you said, maybe my uptrend is from here. Let me see how the market respects here, right? Now, if I'm going to enter this trade, in this case, my mountain top now is here. So you see the market will always set up for you. Yes? See how the market sets up? So you came here and you doubted yourself because this is so far up here, right? Using this little data. But then you saw the market rejecting here, and you would have moved your trend line and bring it to taking this data, saying, maybe this is my uptrend here. So now you have this data using for your uptrend, right? Good. Now, looking for a previous mountain top, this becomes a mountain top here, right? So again, 2 wicks, 1, 2, right? I have my resistance drawn, waiting for a solid body candle to break. Yes? Here is my solid body candle. I enter my trade for my buy, right? The most drawdown I had was around 7 pips, but from that 7 pips, I was able to get at least about, the total movement of the trade was 43 pips, right? And that brought us right back to this trend line. 43 pips, 7 pips drawdown, 43 pips total profit. How we feeling, peoples? Marissa, the solid body candle just needs to be the body closing outside of that resistance. It could be small, it could be big, it could be whatever, so long as it is a body of a candle. How are we feeling, people? Lovely. Awesome. Nisha said free. Lovely. Good. So everybody saw this. You would have been able to get that, right? Now, I need to show another example, and this one here looks really good for me. Now, over here, if we were looking at here, right? We couldn't draw a trend line over here because everything basically came back to a straight line, but then the market started to move away. No, trend line, right? This is not a trend line. This is not me drawing a trend line. This is not a trend here. This is not a trend. Nothing came back. For me to really validate a trend, I want you guys to see, right? When I'm drawing my trend line, it comes back close to my starting point. As you're drawing your trend line and your second touch is far away and you have to carry your trend line like almost to be a straight line, it is not valid. That is unknown. And I just need, I'm so glad that this example's here, because I know that there would have been some persons that actually came on to my Telegram and flood my Telegram with charts, and they could see trend lines that are taking in this garbage here. This is not a trend line. Yes. So don't come sending me nothing on Telegram with this. Oh, look, coach, I see this here. What do you think about this, buddy? You're not going to get a response. You know, some of you message me and you say I want it, you'll be getting that. Right? Not saying that the person that messaged me not gonna want it, that's why it's just my Telegram is flooded. But I'm just saying, don't waste my time. Yes. Lovely. Good. So this is not an uptrend. Please take a picture of it, because if you come and you send me this on Telegram, on WhatsApp, when I see you in person, Coach, I was looking at this trade here, and what do you think about this uptrend? I was thinking that from here I should buy when it breaks. I don't want to see. I'm gonna swerve you. You know what to talk about, right? Women and swerve people. Right. I'm gonna swerve you. All right, good. So let's move on. Let's do, I'm gonna do goal. No, some people like this goal thing. All right, let's look at goal. Last example for tonight before I go over to the lines. All right, good. Now, overall trend of gold. Come 71 people on this call. Let me go. Overall trend of gold. Literally. Wake up, people. Listen time. I know that you want sleep, but if you want to make money, you can't be sleeping for my call. Straight. 71 people on this call. Don't be dropping sleep on my call. Let's go. So overall trend is uptrend, right? Good. Let's draw a trend line. Taking it from any point down here and then bringing it to here. Right? I'm gonna bring it down there. Good. Overall trend, uptrend, right? No. When it comes to goal, boy, know you guys love this pair, right? Know you guys love it. All right. Lovely. So let's go to current market. Automatic. Lovely. No, this is going to be tricky. Current trend for gold. Current trend for gold. What is it? Current trend. So we talked about overall trend was the current trend. That's interesting. I like the mixed responses. That's interesting. Lovely. Some people's, Marissa, please don't tell me a downtrend. I saw that. You know, we don't have, you know, yeah, Marissa, it's fine. It's all right. Right? I like consolidating or uptrend. Right? I like that. Right? Good. Now, what determines a downtrend, Marissa? Lower mountain tops and lower valleys. This just looks like a crash. This doesn't give me a mountain top. I can't draw a trend line here. Please, peoples, I just gave you an example of what I don't want you to send me for an uptrend. This is what I don't want you to send me for a downtrend. Please and thank you. This, no. Please don't do it. So this came here, right? Now this is the overall trend line for the overall trend. So imagine a major trend line. right? Now, if I'm entering this trade for a buy, it needs to break my previous, in this case, mountain top. So we have it here. Boom. Right? Solid body candle break on the lovely pair of gold that everybody likes. Yes. You entered the trade. How many pips drawdown did you get? Because you went straight into profit earlier. But let's say you were still holding the trade around here. You got about 12 pips drawdown and over 155 pips up here. Right? This is gold, peoples. Everybody see? And look how the market respected that support equals resistance line. Look at that. Look. So you identify your previous resistance here. The market came, test, shoot off. Test, shoot off. Test, shoot off. Literally. So if you guys take away what I am trying to tell you and I'm teaching you, and you have to just master this, I'm telling you guys, a lot of you are going to make a lot of money in this market. And therefore, the next thing that you would need is financial education and mindset so that you will know how to manage that money when it hits your bank account. I don't want to see you guys making $1 million and blowing it. I will be very disappointed. Good. So hopefully I'm going to stop the recording because this is the end of me teaching. And now it's time for 5 people to get a chart. So what I'm going to do before you raise your hand, right? I'm going to give you 2 minutes to go on to TradingView, get a chart up that you like. Don't start to dry up yet. Just get a chart up that you like. Then you're going to raise your hand because when I allow you to share your screen, right? When they call on you to share your screen, I want the chart there. I don't want you to not have to be looking. And I don't want none of that. Yes? So first of all, if you guys want to take a screenshot of this or a picture of this just to show how you could have entered this trade, you know, you see the uptrend here, you wait for the solid break of the resistance. Boom, solid break is here. This is where you enter the market. I'm going to put an arrow here. Boop. Right, that was your solid break candle. Yes, market respected this zone. This is gold. You guys could have caught this trade. So take a picture. Yes, lovely. So this is where I stop my